Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for September 3rd, 2024. I'm going to start with some sniper trades of the day. This one is SPY on 10 minutes. So this is yesterday's price action, closed up here. We get a gap all the way down to here. That's that purple box. There's your OR10. There's a violation of the 10-minute risk box for the opening range 10. So we put our stop here. And down we go. You know, if it gets below this price level right here, then that's going to be a good sign because that's going to be a collapsing dragon. Right now, it's below the Bollinger Band mean. That's good. The VWAP is pointing down. So this has the possibility of significant downward move. Still processing the coaching session, so it's giving me the evil eye here. There we go. So first bar, second bar. Now I'm deeply in the money. I've already got almost 2R in hand. So I wouldn't be crazy if I said, how big is that win compared to my average win, or my average win plus one, and say, where do I want to put my stop? To me, your stop has to at least be here above the high of that bar so that you've locked in no lose plus dinner for two. Maybe you pick half that bar and lock in a little more, but you can decide. If this thing breaks below this price level, though, that thing is off to the races. So I just got to decide how much of that open gain is mine. I think you have to at least have your stop at one. You could persuade me to be at two, but I prefer one. That's right. Now I'm happier than a dead pig in the sun. Now you could persuade me to have my stop here and to add a second position. Because if it gets me out, I didn't lose that much. But if this does fail, then I'm going to have a monster position. Your mileage may vary. And now that second position is looking really good, isn't it? Yeah, it is. And it comes back and hits me at the skin of the dragon. Now, if you have that second position on and you see this, if you've got that second position on, when that thing opens right here, you've got to have your stop right here. Because now, after a nice big thunder run and the R10 comes to a point, and now it does not make a new low, and now it's reversing this way, then next stop is the skin of the dragon, which is where you got to get out anyway. But if I got that second position on in here, I would much rather have the exit here on two positions rather than here, because I would have given back too much on two positions. Check or hold. So the dynamics of that second position changes your decision making. I can live with a single position that gets this trade. So on 1 unit of risk, I get about 2R. I can live with that one all day. Reentry is the key to sanity. That is a Kata 2 reentry. I've got a downward sloping Bollinger Band. The VWAP is declining. The PSAR is still in a downward flow. The RL10 rolled over. I have to get short again here because anything below that would be a CD. But because the R10 rolled over here, I can re-enter the short here and have my stop just on the far side of the PSAR. And that box here is the same size risk box as that. So standard risk, standard re-entry on a Kata 2, check or hold. Now, how far do I think this thing can go down? Well, I can go to the high of the day and just drop a range stat. It's about $10 in SPY. And this is about 1, 2, 3. We've moved about maybe 4/10 of a range stat so far. So this is not even an outrageously large move yet. Wait for the R10 to roll over. Then I take the skin of the dragon exit. And that gives me about 1.5 to go along with the 2. I re-enter because the entire market was in a meltdown today. And in that last hour, it gives me another 1.5R. So that's about a 5R day in SPY. Here's Alcoa on the 3 minutes. It was a focus stock for me because metals and mining were vulnerable, and it had such an enormous gap that I knew it was in play. So I just put the OR3 bracket on it. Short. I take the PSAR exit for 3R. And nothing. So we'll take 3 on Alcoa. My Snagit is acting weird. So there's a couple more sniper trades of the day that are basically look just like that. That same kind of OR3 or OR10 to the downside. EWW and EWZ worked perfectly for that today. Today should have been a very good day for you on the short side if you're just following the vanilla rules. Take a look at the traders real quick. Hamad brings home 1.3 in the Dow correctly. Gets chopped up a little bit in Brazil and energy. Tim does a masterful job on Alcoa, getting 2.3 in the same way that we just showed you. And that's his tracking of the accelerated jump stop and then just tracking it with the PSAR. Standard play, 2.3. In AMD, he brings home 1.7, traded the same way with a reentry down here on a collapsing dragon, but the same kind of jump stop and then careful management. And then in Devon Energy, he brings home 2.5, and you can see his adjustments to lock in pieces and stays with it till the PSAR. So perfectly played all the way through. Now let's get the we'll take a quick look at the market now. Here's our 150-day look back. This entire process rolled over. And we got price closing here in the bottom of the daily range, and it's well below this little cluster of support and resistance. So now we're looking at it. We're very close to the Bollinger Band mean, the RL30. Now we don't get the bottom of the dragon till here, and the PSAR flip till all the way down here. As the collapsing dragon. That just shows you how strong this upward pulse of a move was. And then failure to follow through, right where it failed to follow through before. So we're not allowed to be surprised if it's going to come all the way back to the 150. So we should be in profit preservation mode and tactical intraday trading in this range. It's ideal for intraday trading, but with no follow through overnight. That's going to be the ticket for success. All right. Dashboard number one, we're in bullish normal conditions. Much weakness on the short term. Volatility is rolling over and no longer favorable. We're back to neutral condition on risk Z. Still risk on, but much more cautious. We've pulled back quite a bit towards the 200-day moving average as well. Still bullish, but relatively weak on this pullback. Now we've got a lot of buy on dip opportunities here in the US indices and emerging markets. That's the kind of cognitive dissonance that you can expect at critical states in the swing trade for bullish markets. You're always going to feel cognitive dissonance in this moment. And that's why you got to do structured trading. You can't be surprised by it. This is the ideal time for critical state trading. Now in the Dow, you see we got a mixed bag of tricks here. You got some things that were breaking down to new 10-day lows, but then a number of other symbols that are making 6-month highs, like Johnson and Johnson. Coca-Cola continues to thrive, Procter and Gamble, United Health, and Verizon. That's the opposite of super tech. You notice a minus 60 on the 10-day NDX, and Nvidia just got smoked today, minus 12%. There's going to be a lot of people that want to buy that on a fire sale, but they're not going to be in a hurry, but they're going to be stocking it. In the ETFs, again, you're going to see mixed bag. Let's get back to the ETFs. Got a lot of background processes running, I guess. Let's jump to the auto framer. The ETFs are going to show the same thing. There's a mixed bag of wins and wins and losses. The auto framer is going to show us the ones that are actionable. So quite a few, better than 2-to-1 on the auto framer. You got some good names in there like oil, Brazil, Nvidia, Boeing, ExxonMobil, and oil exploration. So the energy sector is especially ripe. You have a handful of narrow ranges. So we got squeezes in 3M, Chevron, Merck, Caterpillar, Goldman, JP Morgan, and Boeing. So it's not the tech. All the tech got murdered today. It's the Main Street finance and energy that's posturing for good short-term trading with favorable reward to risk. You can see the same numbers and the same reward to risk ratios on the TC 2000 auto framer. The multi-time frame NDX summary, just look at the pain and suffering on both sides of the aisle. What's not suffering right now? Coca-Cola continues to thrive. Johnson & Johnson and Procter & Gamble. Coke was another strong day on the upside today. Flight to quality, it feels like. We'll take a look now at the pullback, the pullback into the river. So it stalled at the far side of the river at the same place it stalled before, and it's threatening to come back to the bottom of the river all the way back to 530. So this would not be surprising to see exactly this kind of retracement. There will be steps along the way, but we're in the silly season for politics, and the next 2 months are going to be the maximum of chaos, and that favors the statistical intraday trader. So we're going to continue to emphasize that in all our trading going forward. All right, that's everything for today. We'll get this published and posted. Take good care.